Hey guys, welcome to another episode of the Block Thrasher Daily Crypto Update, where we are simplifying crypto with daily news, commentary, analysis, and education. Listen, I apologize. I messed up. Yesterday was one of the first weekdays in months that I did not create a daily market update. And the reason was, I do have a reason. It was a good reason. The reason was that I was dealing with a ticket, and so I had a court call with the ticket, with the judge, I should say, with the court in Utah. And I guess I thought, I'll just mention it. I've had 2, 3, maybe 4 tickets total in my entire life. I'm an extremely cautious, law-abiding, careful driver and have been for 20-something years. However, a few months ago when I was traveling through the state of Utah, just visiting for a couple days, I got pulled over and ticketed for not wearing my seatbelt properly. I was wearing my seatbelt. It was securely fastened, latched in, tight across my lap and my chest. However, I had been driving a lot and my seatbelt had worn my neck raw to the point that it was painful. So I simply, which I normally never do, slipped it under my armpit, the shoulder strap. The officer pulled me over and gave me a ticket for not wearing my seatbelt properly. And I thought, okay, maybe the law says you have to have a shoulder strap over your shoulder, but this just seems kind of petty. Maybe there's a decent chance that if I appeal to the judge, they'll let me have a warning. Well, long story short, nope. They fined me $100 for wearing my seatbelt improperly. This is what we've come to. And, it's okay, no big deal, $100. But the principle of it for me was like, is this what law enforcement has come to, that we're now getting so petty down to the point that we're spending time and money on petty issues like this while I'm certain there's serious drug violations and even things as significant as molestation, unsolved murders, etc., that it just seems like would be worth so much more important. And yet anyway, enough on that. Utah is a beautiful state. Yeah, I think that we've become a little bit misguided. Also in this whole ideology that, hey, we need to protect everybody from themselves, right? We got to make sure not only that you're wearing your seatbelt, that it's on right, and it's going to go. I mean, where does this end? Well, I mean, shoot, I can do all kinds of things that are dangerous to myself. I can go drink alcohol. I can get married. I can ski. I can freaking jump from a helicopter with a parachute that may or may not open. On and on and on the list goes. So what are we going to do? We're going to get to the point where we've made anything that has any potential for a level of danger illegal? Anyway, I understand. Listen, we have to have a measure of balance. Sure, we have to look at the issues and evaluate and pass some laws that prevent, especially from people causing harm to other people. But these laws about protecting us from ourselves, well, shoot, more deaths are caused by heart disease. So why not outlaw the things that cause heart disease, that cause obesity, fast food, sugar? Let's outlaw sugar, for crying out loud. Where does it end? That's all I'm saying. Hey, it's not a big deal, but this constant trend towards more and more invasive regulation and laws that just allow for you to be really targeted at any point in time. I mean, if law enforcement or government of some sort wants to target you, I remember seeing a report by John Stossel on Fox News years ago, About every U.S. citizen basically commits 3 federal felonies unknowingly every day because there's so many laws on the books. Anyway, this has not very little to do with crypto in a way. I mean, I suppose it does to an extent, but that's the story. And I spent more time on it than I wanted to about why I was not here with you yesterday giving you a crypto update. All right, let's jump into it. This is another incredible day for crypto. It is phenomenal what is going. The market is hot, and there's a lot of good news. There's also a lot of foo-foo raw because Dogecoin has made it into the top 10 once again. It is up 95% on the week. It's at 12 cents. Whoa, it's up 54.9% in the last 24 hours. Foo-foo rah. Word of the day, FOOFARAW, a great fuss or disturbance about something very insignificant. You know what? I am exhausted about talking about Dogecoin. I don't really want to talk about Dogecoin, but I can't ignore it. It's in the top 10. And here's the thing. This is all I'm really going to say about Dogecoin is Dogecoin defies the core principles of cryptocurrency, which is sound money, right? The reason Satoshi Nakamoto created Bitcoin and most of the other cryptos exist, if we're talking about them from just purely serving as a medium of exchange, which is all that Dogecoin has, was to create something that was not inflationary like the fiat currencies of the world, something that was limited in supply and that would hold value, that would become a store of value. Now, if it's just a medium of exchange, some inflation isn't a problem, but Dogecoin doesn't have some inflation. It has massive inflation. And so here's the bottom line on my analysis on this. Dogecoin is being set up for a spectacular dump. Could I be wrong? Of course I could be wrong. And here's the only reason why I could be wrong. This is a nascent space, and there are so many new people, retail people coming in to crypto. And what's happening is Bob is at work talking to his friend Joe or Sally and saying, I just doubled my money in Dogecoin. It's incredible. You should get into crypto and you should buy some Dogecoin. And Sally, not knowing anything about crypto, probably never even heard the word market cap or total supply, couldn't explain inflation to you if she had to, says, oh, yeah, sweet. How do I do that? Well, you get, oh, no, you can't go to Coinbase because they don't sell Dogecoin on Coinbase, but this is what you do. Anyway, here's the thing. The Litecoin miners, who are the ones who are receiving this inflation, right? As they mine Litecoin, they are dual mining Dogecoin. They are earning millions, 14 million new Dogecoin every day. They just accumulate and they accumulate and they accumulate. They don't even pay attention because it's not profitable to mine Dogecoin. It's not worth anything in the short term. So they accumulate, they accumulate, they accumulate. There's a cycle for 6 months. They'll accumulate. They're selling off the Litecoin because there's more profit in the mining of it. And that as they're earning Dogecoin on the side, they just accumulate. And then they wait and they sit on it and they wait. And they wait until there's a TikTok meme-induced FOMO surge. And the rest of the market is pumping as one of the best times as well. The entire market's up, right? And then they unload. Massively unload. Anyway, more talk about Dogecoin than I wanted to talk about it. All right, looking at the rest of the market, Bitcoin is $62,935.21. That is no change in the last 24 hours, but it is up 8.7% on the week. Bitcoin's dominance has dropped to 52.4%. Ethereum is at 12%. Gas prices have shot back up. We saw them as low as 80 something for standard a couple days ago, climbing up since then. Now 224 GWAY for a transaction. Yeah, still painful for anybody doing anything, especially anything that involves interacting with a smart contract on Uniswap or any other type of DeFi process. Total market capitalization is $2.246 trillion. Yes, this is sweet. It's only up 0.9%, but it is holding well above 2 trillion at 2.2. Money coming in. Money coming into the cryptocurrency market. It's a good day for crypto, friends. All right, moving back to prices. Ethereum is $2,346. Ethereum is doing well, up 11% this week, up 3.3% in the last 24 hours. The Fire, which is Binance Coin, BNB, has started to quell slightly. It's actually down 3.3% in the last 24 hours. Of course, we saw just a meteoric rise with Binance Coin this week. Currently $547.60. XRP also hitting the brakes just a little bit over the last 24 hours, down 2.7%. It's currently $1.70, which is just mind-boggling, actually. Total market cap on XRP of over $77 billion. Total market cap on Binance Coin, $84 billion. It's interesting to see these projects encroaching upon the dominance of Ethereum and Bitcoin as well. Cardano is up 13.8% on the week, 2.5% in the last 24 hours. It is currently $1.42. Cardano had reached an all-time high of $1.50 something overnight, come back down a little bit. Obviously, that doesn't include if we factor in one of those spike flash highs that we saw when it initially launched on Coinbase Pro, or I think it hit like $1.80, but that wasn't really a legitimate high, I don't think. So anyway, generally speaking, Cardano is up near all-time highs. And we've got a story about Cardano today. Let's just jump over to that while we're on the Cardano price here on our market overview. Cardano breaks $1.55. Crypto analyst expects ADA price to go over $10 by year end. Let's see what this analyst has to say. On Wednesday, April 12th, Cardano's token managed to extend the rally that has made it one of the year's best performing crypto assets, helped by the excitement surrounding the upcoming listing of Coinbase shares on NASDAQ. That's an opinion. I don't know. Maybe is this market pumping? Whoa, because of the Coinbase listing? I don't know if there's a direct correlation. I mean, I would need to see a better argument to explain why that would be the case. I suppose one could say that this Coinbase listing sort of brings a validation to the cryptocurrency space, because now we have one of the most notable crypto exchanges being listed on the world's largest stock market and being traded. And that's sort of going to, again, make all of the institutional investors and the big Wall Street players say, okay, crypto's here to stay. Maybe we'll be willing to play a little bit more. And there you go. Crypto's here to stay. Let's play. Come on, boys. Come on, Wall Street boys. Jump on in. That's right. Pump the market. Data from TradingView indicates that at 8:40 on Wednesday, April 14th, the Cardano price hit $1.55 on crypto exchange Kraken, thereby setting a new all-time high. As for how high the Cardano price could go, on Monday, April 12th, when ADA USD pair was trading around $1.27, crypto analyst Justin Bennett told his 39,000 followers on Twitter that he expected the Cardano price to 10x from current prices, meaning that he expects the price to get to $10 before the end of 2021. Okay, why? Is there a reason why? Let's see if it's stated here. On April 10th, Bennett said that 10% is a conservative price target for Cardano. At the time of writing, Cardano is trading around... No, nothing stated as to why. All right, fine. Yesterday, on April 13th, Lunar questioned an interview with Charles Hoskinson. And here are a few of his comments that he made. Why in God's name would you want to create an application where it costs more in gas fees than any of your other margins? That's true. That's a problem right now on Ethereum, at least. If my competitors can't do what we do, they're going to die. Look at the demographics of Africa, Ethiopia. Most are digital natives and most are pro-crypto. Okay. All right. Well, unfortunately, there's not much given as to what the analysis is for Cardano to reach a price of 10. We've covered this a bit before. I've talked about it. $4 or $5, maybe $6 seems reasonable. And the argument, the analysis for that would be at $6, but this was a while ago, and Ethereum market cap has gone up significantly. I should run the analytics again on it, but at $6, Cardano would be getting close to approaching the market cap of Ethereum. Like I said, it could be closer to $10 now. So that would be a reasonable argument as to why Cardano could reach $10 by the end of the year. If we see a mass exodus, or if we see a surge in new projects coming onto the Cardano ecosystem once the smart contracts are launched, it's possible. I would not rule out the possibility of $10. I think something like $4 or $5 would be more reasonable. But hey, this is crypto. Crypto defies logic. If you had asked most people, I mean, I don't think anybody was predicting $1.70 for XRP 3, 4, 5 weeks ago. Or maybe there's somebody out there, but most people would have thought that would have been a little bit kooky. Let's talk about the XRP thing for just a bit right now, too. You know, I think it is a little bit kooky, and I'll tell you the reason why. There's been a lot of good, positive news, which we've covered here every day, about XRP, but the SEC case is not over. They could still lose. XRP can definitely still lose. And if they do, you've got to think that that's going to have a negative impact on that price of XRP. So I feel with XRP, my take is sort of, I approach it as I would with Dogecoin. High risk. High risk, potential high reward. That said, you got to approach it that way. So you trade it. It's not a long-term hold. It's not an investment like Bitcoin or Cardano or maybe even Binance Coin, which has got, man, Binance, you've got to hand it to them. Whole bunch of different solid methods of bringing value to that ecosystem. Talked about the things that concern me about it, but you know, they're making it happen, and you can't argue against the growth that's happening and occurring there. All right, moving back to prices here. Polkadot, $41.42. It is just held down a little bit on the week and just held its price for the last 24 hours with very little movement. Uniswap is up 9.3% on the week, but down in the last 24 hours, currently trading at $34.13. Litecoin saw a bit of a surge this week, up 11%. Down in the last 24 hours, just over 1%, but it's doing quite well, $264.65. Dogecoin, we already talked about Dogecoin. Dogecoin just seeing this massive pump, 100% in the last, close to 100% in the last week, nearly doubling, up 60%. Most of that came in the last 24 hours. where we just got this pump. And the question is why? There's no significant news. There's nothing there, nothing happening with Dogecoin. So, who knows? Who knows? Maybe there was just a resurgence in the fervor on the social media platforms. Chainlink up 4.4% in the last 7 days, up 5.9% in the last 24 hours. It is trading at $36.36. All right, let's just quickly take a look at the daily winners here. Dogecoin coming in at number one with its 60% gain. IOST up 33.3%. AMP up 31.2% in the last 24 hours, up 36% in the last 7 days. I believe I did do a coin highlight on AMP not too long ago, and it is an interesting project that looks like it has some good potential use cases there. That might be one to look in. Interesting to see it here as a winner today. What are the losers? PundyX down 10%. Chili's down 6.6%. Chili's has been struggling a bit of late. That is a very interesting project, though, with good potential. So, out of the losers here today, well, Clayton is also down 10%. Helium, Wink, Hollow, and Solana is down a bit. Solana being a very solid project. This might be a decent time to grab some Solano. All right, that's enough for prices today. We cannot not talk about the Coinbase stock offering. Coinbase stock is now being listed on the world's largest stock exchange, the New York Stock Exchange. The biggest crypto exchange in the world is to start trading on one of the world's biggest stock exchanges with all eyes on this event. Futures have it at about $600 per share, giving it a market cap of $150 billion, more than any other exchange, including NASDAQ, where it will be listed, or NYSE. Oh, it's being listed on the NASDAQ. I'm sorry. I don't know why I was thinking New York Stock Exchange. Listed on the NASDAQ. That's insane that the futures price, if it holds, would put it at a market capitalization greater than the NASDAQ. Based on valuations in European private markets, Coinbase was trading at a $150 billion valuation this morning, higher than the LSEG, ICE, and CME market cap combined, and at close to 60 price to sales ratio, while other exchanges traded between 3, NASDAQ to 15 CME. Man, that would, if that happens, if it's anywhere even close to that, just think of the attention that brings to the traditional financial world. Like, what? Coinbase? The crypto exchange? Larger than these 3 combined? Holy crap. Maybe I need to take a look at this. This is further proof that the framework of traditional valuations is broken. Yeah, you think? This is noted by Amber Gadar, co-founder of Alliance Block, described as the first globally compliant decentralized capital market. Tesla has traded at a P/E of more than 1,000, while GME has long traversed beyond the PE valuation method, with some ascribing the phenomena to the opening of stock trading to more of the public through apps like Robinhood. On the first day of trading, moreover, volatility is to be expected, with Jun Lee, founder of Ontology, stating that the Coinbase listing signifies the acceptance of cryptocurrency business in traditional finance and will bring in even more funding and investment from a range of different institutional investors, but it will also attract new talent to the industry with broader skill sets. And I agree with that wholeheartedly. This is a good thing because it will help attract traditional finance funding, investment from institutionals. And it also is a positive in regard to regulation and the concern. I remember back in 2017, myself and many others talking about and thinking about the concern that crypto might just be regulated away. And there was fear, certainly. It added to the FUD. But these types of events they're happening so frequently now, they just totally wipe away those concerns that we had in 2017. Bitcoin has been rising in the past few days, up 10% this week to 64,000. We know that. How the coin will react to the Coinbase trade once the Coinbase trading starts, is not clear. Yeah, agree with that. Some suggest it may indirectly open more access to the crypto market, with Eric Kaphammer, CEO and head of Polyant Capital, stating the Coinbase NASDAQ listing is essentially the first legitimate bridge between the traditional capital markets and the crypto markets. My estimate is that once established, we will surely begin to see more flow of capital into crypto-focused companies and cryptocurrencies themselves. Now, if you're following what I'm saying, what I'm reading here, what he's saying, that has to bring a smile to your face, especially for everybody that's been in crypto for some time. These are the things that we've been waiting for, this type of adoption. There's going to be many, many early crypto adopters. And I'm thinking even those who are coming in still, as this going to continue to happen, we're going to see this trend. We're going to be incredibly happy. There are numerous Bitcoin miners already trading on stock markets, but this is the first established crypto exchange of size to list, and that will bring legitimacy, says Greg Carson. Going public is a great validator for an emerging industry. The trend has been clear throughout the history of emerging technology. With computers, it was Apple. With mobile phone companies, Sprint. With software companies, Microsoft. And internet companies, Amazon and Google, all had periods where the financial community and public were skeptical. People forget that. Going public in the face of skepticism is a bellwether event, leading to acceptance from traditional spaces and transformation of their industries over time. With Bitcoin now nearing the market cap of silver, it is becoming an unignorable asset. This listing of Coinbase, thus, is in many ways its debut, as the crypto is about to enter mainstream finance. Dun, 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 dun. All right. Why is Bitcoin seeing this explosive growth? According to Bitcoinist author Yashu Gola, the real reason behind Bitcoin explosive rally is not Coinbase, but inflation. I don't know if I'd go to that extent. I think I would say they both are impetus for the rise, but I do agree that the inflationary argument is huge and maybe the primary reason. Bitcoin surged past 64,500 this week, shattering yet another record high milestone after a month of downside consolidation over sentiments that a fresh Wall Street listing of one of the leading crypto firms, Coinbase, would attract more wealthy investors to the burgeoning sector. But the flagship cryptocurrency borrowed its bullish cues from elsewhere as well. On Tuesday, the U.S. Bureau of Labor released March's consumer price inflation data, also known as a CPI, which we know is cooked, showing that the index rose by its most in nearly 9 years. So even the U.S. Bureau of Labor is acknowledging that we have seen more inflation recently than we have seen in 9 years, led by the pent-up demand and rising fuel prices as the U.S. economy continues to recover from the pandemic-driven lockdowns. Beating expectations, the Labor Department noted that inflation rose 0.6% in March. And the thing is, you can multiply that 5-10 times maybe. If you look at the real numbers provided by places like Shadow Stats. Anyway, 0.6% in March than February, making its quickest pace since February, August 2012. According to a Reuters poll, the outcome beat economists' expectations of 0.5%. Meanwhile, the headline inflation surged 2.6% against the expectations of a 2.5% raise. Yeah, don't say. Kathy Boschinasik, the chief U.S. financial economist at Oxford Economics, said that inflation could rise to 3.5% this year, which really means we're probably looking at 15%, 10 to 15%, 7 to 15%. All right. Big range, I know. But look, you don't have to be a Oxford Economics, professor or chief of whatever she is to understand that there's some inflation going on out there. All you got to do is drive down to Home Depot and walk through the aisles and take a look at some of the insane prices of building materials right now. On your way back home, stop at the gas station and fill your pump up and take notice of how you're probably going to spend somewhere near $100 to fill your tank. Stop by the grocery store, buy a few things, and you're going to look around. You're going to see inflation. Bitcoin behaves bullishly against inflation fears. The cryptocurrency's massive upside move after its mid-March crash came on the prospect that the U.S. dollar, with time, would lose its purchasing power. This is a given. This is a fact. The analysis is undeniable. The U.S. dollar will, continually over time, lose purchasing power. That was due to the Federal Reserve's decision to slash down benchmark lending rates near zero while launching an unlimited bond buying program to cushion the U.S. economy from the pandemic-led recession. Later, the Federal Open Market Committee, also known as the FOMC, ruled out that it wants to push inflation above 2% in the future. That was written wrong. They want to push inflation to 2% or more in the future. That further prompted investors to increase their exposure in the Bitcoin market thanks to its limited supply cap of 21 million tokens. Even firms like Tesla and MicroStrategy added billions of dollars worth of Bitcoin tokens to their otherwise cash-based balance sheets. Meanwhile, mainstream financial services saw potential demand for Bitcoin from institutional investors. In turn, Morgan Stanley and Goldman Sachs announced crypto-enabled investment services. We talked about those stories weeks ago for their wealthy clients. Global payment giant PayPal allowed Bitcoin checkout on its legacy payment platform in addition to the option of buying, selling, and storing the cryptocurrency. Bitcoin's latest climb above 64,500 came on the heels of confirmed inflation growth. Investors continue to watch whether the rising prices are transitory or are here to stay. The attempt to realize how long the Fed could continue its ultra-accommodative stance, including a $120 billion monthly purchase of government bonds and mortgage-backed securities. So far, the central bank has clarified that it does not wish to raise rates until 2024. We basically have a guarantee that interest rates are going to remain. That's what this ultra-accommodative stance is. Interest rates are going to remain extremely low, and inflation is going to remain extremely high. This stance remains long-term bullish for Bitcoin. Oh yeah. Oh yeah. According to Forbes.com, we should expect more Bitcoin on balance sheets as PayPal, MicroStrategy, Fidelity, and Walmart sound off on blockchain. Hey, I've never heard this with Walmart. That's something new, at least to me. Correct me if I'm wrong. Building on its relatively new service, letting PayPal's 375 million customers buy, hold, and sell cryptocurrency directly from their accounts. Dan Schulman, PayPal CEO, said on Tuesday that the company's recently launched Checkout with Crypto service, which encourages purchases with Bitcoin, Ether, and other cryptocurrencies, will easily reach $200 million in transaction volume within months. Woo, sweet. Schulman's comments were delivered at Forbes' third annual Blockchain 50 Symposium, celebrating large companies using the technology behind Bitcoin to improve their businesses. It took soon-to-go public Coinbase, the United States' largest crypto exchange, 2 years to reach the same volume on its similar merchant service. Oh, wow. So within weeks or months, PayPal's volume is what is equal to Coinbase's after 2 years of business. Incredible. In the third quarter of 2020, PayPal had payment volume of $247 billion. So people are using it. That was always a big question with the whole PayPal crypto merging services thing, together. And here we have it. People are using it. Schulman was one of a dozen executives from Visa, Onyx, JP Morgan, Fidelity, and LVMH, among others, at the event, which serves the purpose of reflecting the growing cryptocurrency and other blockchain ambition of Forbes Blockchain 50 list members. Of more than 2,000 registrants and 1,000 attendees, approximately 500 took part in a poll that showed 26% of respondents. Oh, wow. This is incredible. 26% of respondents expect their companies to buy Bitcoin this year. Another event headliner, MicroStrategy CEO Michael Saylor, pointed out that the result is mic drop worthy. We went from zero adoption, he says, in the world to 26% enthusiasm. 26% enthusiasm. 26% enthusiasm in less than 12 months. He says, but despite the galloping interest in Bitcoin and other cryptocurrencies from both institutional and retail investors, Schulman said PayPal is one large company that is unlikely to put Bitcoin on its balance sheet this year, citing volatility concerns from investors. Interesting. On the flip side, Saylor noted on a separate panel that everybody talks about the volatility of Bitcoin, but volatility measures the rate at which it's going up in price. It's the same as buying the volatility of Tom Brady. He's got the highest volatility in the football league. LeBron James has high volatility in the basketball league. The winner of every single sport and the winning team of everything on earth is always the most volatile by definition because it's the one that's winning most often, added Saylor. You gotta love Saylor. So he's such an articulate guy and he has an argument for everything. Yeah. I was thinking about that the other day. What was it? There's something else. It's like they talk about the volatility of crypto and Bitcoin and whatnot, but there's volatility everywhere. Everywhere you look in the world. That's just things go up and things go down and prices go up and prices go down. And anyway, I know there's volatility index, which which we analyze the amount in which that happens, and there are differences in the volatility. But I agree with Saylor's point. I had another example, but it's not coming back to my mind, that I was thinking about the other day, of something that's just widely accepted, but also very volatile. And it is because it is a winner. Since August 11th, 2020, when MicroStrategy revealed its first Bitcoin purchase worth $250 million, the software company has bought $2.2 billion in Bitcoin, more than any other publicly traded company in the world. Its stock has soared 534% over the past 12 months, while Bitcoin has gained 817%, and the S&P 500 has added 49% over the same period. Michael Saylor's strategy is working. They are killing it. Of course, we're in a nice bull market, which helps. Most of the event discussion centered around Bitcoin and the ever-rising wave of institutional Bitcoin mania, with comments from Fidelity, Northern Trust, and the CME Group. Yet, alternative cryptocurrencies and blockchains were also mentioned. Visa's head of crypto, Kai Sheffield, said the credit card giant ultimately wants to support new types of cryptocurrencies and protocols and find ways to integrate them into Visa's core network. Interesting. Last month, the company started accepting settlement payments from its global cryptocurrency wallet partner, Crypto.com, in stablecoin USDC on the Ethereum blockchain. Beyond cryptocurrencies, executives from Walmart Global Tech, luxury powerhouse LVMH, South Africa-based pulp producer Sappi, and partner of Russia's leading mining and smelting producer Nornickel, Atomize, discussed applications of distributed ledger technology in supply chain tracking and fraud prevention, which is one of Cardano's strong suits, so we'll see. The 2-hour event concluded with a panel discussion with DTCC and Vanguard's blockchain bosses, showing how the COVID-19 pandemic accelerated the process of merging the two worlds of enterprise blockchain, which traditionally doesn't use cryptocurrency, with the growing digital asset space. John Evans, head of blockchain strategy at Vanguard, said, with the net effect of everything that occurred in markets between the beginning of the lockdown and maybe the fourth quarter, I think that all the mindset that needed to shift definitely at all levels of these large financial services organizations finally coalesced. Good news for the cryptocurrency space. Oh, yeah. All right, let's move on. We got 2 more things I want to talk about today. Our buddy Gary Gensler. The Senate is expected to confirm Gary Gensler as chairman of the Securities and Exchange Commission on Wednesday. That would be today. And crypto assets, including Bitcoin, are likely high on his agenda. With Democrats in control of all 3 major branches of government and the SEC commissioners now with a 3-2 Democratic majority, Gensler is likely to face calls from progressives to act on several fronts, including ESG, the GameStop fallout, and the Archegos fiasco, payment for order flow, fiduciary obligations, and especially regulations around securities in the crypto space, including a Bitcoin ETF. So a Senate vote on Gensler's nomination is scheduled for 11:45 a.m. Eastern Time, which means that it should be happening almost now, like as we speak, at the time of recording. See if we got anything. Gary Gensler, let's see if there's any news as to whether he has. Gary Gensler has a full agenda as he gets to take. I'm not seeing. Takes to Senate floor. Senate set to approve Gary Gensler. I'm not seeing anything that says that he has been approved, but I think it's a sort of a foregone conclusion. And we know that Gensler is, at least I don't know that we say we know, but we assume that he is pro-crypto, since he was formerly a professor at MIT Sloan School of Management who taught on Bitcoin and blockchain. So this is good news. We'll see. What is this Archegos fiasco that they talk about? I thought this is one of the things that I wanted to mention. You know, there's all this talk about how crypto needs to be regulated and how there's this potential for fraud and this and that and the other thing. And there's this story, this Archegos fiasco that we saw happen this year, which illustrates, we were talking about the volatility thing, and we talk about there is the idea that the heavily regulated financial world is free of like insane levels of risks and leverage and is ridiculous. And this story simply illustrates that. What on earth were some of the world's biggest investment banks thinking when they enabled an opaque family office whose founder had a history of regulatory issues to rack up multi-billion dollars worth of leverage? It's still unclear exactly where the Archegos capital fits into the annals of spectacular hedge fund blowups, but the early signs are that it will probably prove the biggest since long-term capital management's collapse in 1998. The saga erupted into the open last Friday when Goldman Sachs and Morgan Stanley broke cover and started dumping multi-billion-dollar positions in the U.S. and Chinese stock markets. They did it on behalf of an unnamed investment fund that had failed a margin call, essentially a demand to put up more collateral against its trades. That sparked an epic whodunit across markets, with Archegos, an obscure, remarkably opaque investment group run by Bill Wang, a former Tiger management hedge fund manager with a checkered past, which I looked into it, and it wasn't. They got nailed on some wire fraud, an illegal wire fraud, basically. Quickly identified as the primary party involved. By Monday, Credit Suisse and Nomura were admitting that they would probably lose billions of dollars in the fallout. At this early stage, there are still far more questions than answers. Here are some of the more pressing ones. First and foremost, what on earth were some of the world's biggest investment banks thinking when they enabled an opaque family office whose founder had a history of regulatory issues to rack up multi-billion dollars worth of leverage? Wang paid $44 million in fines to settle U.S. illegal trading charges in 2012 and in 2014 when he was banned from trading in Hong Kong. True, Archegos' status as a family office means that it was exempt from a lot of the standard regulatory disclosures demanded of hedge funds, but banks' prime brokerage desks, which service hedge funds with research, trade structuring, and leverage, appear to have failed basic know your customer processes. And I don't think they mean in terms like who your customer is, but just the proper underwriting of risk. Each bank may have felt comfortable with their exposure to Archegos, assuming they could always ditch its positions to cover themselves. But they failed to appreciate that if everyone has to dump tens of billions of dollars worth of equities, the collateral they may have embedded in their contract is going to be wholly inadequate. All right, enough on that. Crypto terminology. Today we're in the E's, and we'll cover this real quickly and wrap things up for today on this Wednesday, April 14th. ELI5, short for Explain Like I'm 5, a plea for simplicity when crypto concepts are being explained. And that's what Block Thrasher is all about. Trying to bring simplicity by shattering the complexity of crypto. ERC20. ERC are ERC20s. ERC20 are tokens designed and used solely on the Ethereum platform. ERC 721, a token standard for non-fungible Ethereum tokens. An Ethereum improvement proposal introduced in 2017. It enables smart contracts to operate as tradable tokens similar to ERC20 tokens. Emission, the speed at which new coins are produced and released, very similar to the inflation of a supply of a coin. Enterprise Ethereum Alliance has nothing to do with Star Trek. The EEA, a group of organizations and companies working together to further develop the Ethereum network. Escrow, a financial instrument where assets or cash are held by a third party while a buyer and seller complete a deal. Ether, the form of payment used in the operation of distribution application platform Ethereum in order to incentivize machines into executing the requested operations. Ethereum Improvement Proposal, also known as an EIP. Ethereum Improvement Proposals, EIPs, describe standards for the Ethereum platform, including core protocol specifications, client APIs, and contract standards. Ethereum Virtual Machine, also known as the EVM, a Turing-complete virtual machine that enables execution of code exactly as intended. It is the runtime environment for every smart contract. Every Ethereum node runs on the EVM to maintain consensus across the blockchain. Cryptocurrency exchange. All right, what is an exchange? Sometimes called a digital currency exchange, is a business that allows customers to trade cryptocurrencies for fiat money or other cryptocurrencies. Exchange traded fund, also known as an ETF, a security that tracks a basket of assets such as stocks, bonds, and cryptocurrencies, but can be traded like a single